new team members among us. So we said our POIs are usually what? First, we have a POI. Mind you, you have built your bias. We're not going to be talking about building bias in this video. You have a POI, and your POIs, around the POIs, you have what? Your order block. And on your order block, we said your key levels are embedded in your order block. And there are features of a tradable order block. It's not every order block that you see that you trade. It's not all key levels that you see that you trade. And the features of the tradable order block is same as the features of the what? Tradable key level. So we said, firstly, you want to see that the order block was responsible. Let's say, for example, this is a what? This is a support. These guys were already buying. Traders were already buying from this support. So you want to see a situation whereby price comes, takes out these guys, and then what does it do? Break structure. This is usually referred to as what? The bullish type of what? Order block, the bullish order block. We have the bullish and the bearish order block. Forms of order block, we have the what? The drop, base drop, and the rally, rally. You understand? And then we have just the usual drop and then the rally, which is usually termed as the bullish order block. And then we have the usual rally and then drop, which is usually termed as what? The bearish order block. So this is a bullish order block. Now, this order block is tradable. It has attained one of the features of a tradable order block. What's the next thing? You want to look out for the fact that you want to see some form of maybe internal range liquidity, maybe something like this. And then what do? You make your entries from the key level on the order block. Your stop loss is usually below the order block. So you see, this order block was responsible for taking out early buyers from the support, breaking structure. There's liquidity around it, maybe imbalance or thereabouts, and then it broke structure. That is one formation. We have another one, something like this. That goes like this. You understand? This could, price just comes. So you want to see other blocks like this. This is your what? This is your order block. This is another order block. Usually refer here as your QMRO, usually refer here as your QMRO type of key level. So now, that is why I had to what? Bring up EU. So this, now we know one of the features of a tradable order block. Let's go back to EU. After you beat your buyers and all that, this is what actually happened, and that's why I'm interested in just this area. Now, what do you see here? Let's go to a much more lower time frame, like the 30 minutes time frame. Now, what we have here is that we have a situation whereby these guys were actually buying from this what? This is supposedly a support area. You see buys from here, and their price came, took everybody out. And what happened next? You can see a break of structure here. You can see that we have a break of structure here, right? We have a break of structure. If they had a break of structure around here, you see this other block. So this now becomes what? Firstly, it has qualified. It has one of the features of a tradable order block. Took out liquidity, swept liquidity, and broke structure. Becomes tradable. What do you look out for next? That was where I marked. I did this. I marked this area around. You look out for your what? Your key levels. Come on. Why is it freezing? So you look out for your key levels. Trying to convert this thing to. This guy needs to be up. Okay, so you look out for. Well, please hold on. Trying to convert something. Well, the network is actually causing the system to freeze. Okay, now, yeah. So we have a V-shaped key level. You want to trade from where? You want to trade from the discount level. That is, you want to trade from the other block that was responsible for taking out liquidity and breaking structure. You don't want to trade from this range. This range. If you go back to the lower time frame, you see a lot of reasons why you should take buy continuation. Maybe you see rally-based rally, open close key levels and all that. No, you don't want to do that. You want to trade from this guy that was responsible for break of structure and what? Taking out liquidity from here. So what do we do next? We need to mark out our internal range liquidity. This is what I marked out here. This red line, you see this buy, now becomes our internal, marked internal range liquidity, and then price came and gave us about 30 pips yesterday buy. 30 pips buy. I missed that buy. Sincerely, I missed that buy. I won't lie. I missed the buy. Even though I did the analysis, I missed the buy. It had and gave 30 pips. That was over 1:3. And then today, it gave a better opportunity. Now, still on that liquidity sweep and breakout structure. See what happened here? Liquidity sweep, and then for sweeping liquidity and breaking structure, you trade this guy, or you trade the QMRQ level. This level, it's what? This level is the QMRQ level. This level becomes the QMRQ level. You see it? Price actually reacted from it, but it failed to break structure. We did not get a break of structure. It therefore means this level becomes what? Our inducement liquidity. Our inducement liquidity. So this is more like your point A, your point B. This is more like your point C. And then this is more like a tradable block. This very one here, not this one now. This very one becomes our point A. And then, like I said, point B. And then point C. Point C actually formed D, but it was supposed to form a new high. It was supposed to form a new high. Since it did not form a new high, this area then becomes our internal range liquidity or inducement liquidity, which is what we have here. Where is that? That's what we have. And the price came, boom. So that's what we have here. One of the scenarios that you would see play out. So that's why you see this money price came. I missed this very one. And the price was bought. And then I had to go over I had to wait again. After this guy, if you check very well, this is what, if you check the 5 minutes time frame, we have this one once again. We have this one playing out once again. Sorry. We have this one playing out once again. You see it? So this makes the entry technique, the model, the logic once again. And then you see it. This is actually what the early bias. We check the 5 minutes time frame. You see it very well. This was actually where the support area. The price came, swept them out, and then broke structure. Then what next? I had to what? Mark this area as what? My tradable order block. Why? Because I have already best of all. You need to build that bias. So it's that bias when you're trading the line of the overall market structure, it will always go in your favor. So you need to establish the buy bias first of all from the higher time frame before these things can actually work in your favor. So this is the 15 minutes time frame as well. And then what next? I had to look out for what? My vision, they marked my internal range liquidity. That's another logic, which was red line, I had to mark that place, and then I won. Supposedly, I think my overall target has been met level, external range liquidity has been taken up. But since we're talking about the much more higher time frame on the 4 hours and why it is buying, you understand? I'm looking at a situation where price will get to this level or take out this external range liquidity. This external liquidity, this ERL. That's your ERL payout. That's this external liquidity being taken out. And so that's why I'm buying currently. Maybe I'll send a screenshot of my entry so that you can see it. That's why I'm buying. So that's just the logic. There is no need for you to complicate things. If you don't see any of this playing out, there's no need forcing the market to what? To give you any of these to play out. There is no need forcing the market. If it doesn't play out, it doesn't play out. You go over to another market, you go over to another asset and trade it. Don't force the market to give you this logic. You just want to see this logic. It will always go in your favor if this logic plays out. And that's what the entire class, the strategy is all about. You want to capitalize on the market's weakness, and it gives you this. This is what it gives to you. Capitalize on the market's weakness. You are not the owner of the market. What you do is capitalize on the weakness of the market, and then you trade against the weakness. That is just all. So I'll see you some other time. I hope this video helps somebody. All right, cheers.